Hi, I'm Tom Curtis, President of Burger King, US and Canada, and you're watching Taking Stock.
2 minutes ago, here into the closing bell, the S&P 500 and the tech-heavy NASDAQ for yet another session here on Wall Street, set to close at all-time highs. This now will mark 6 consecutive weeks of gains for the S&P 500. Oil benchmarks moving lower, actually Brent up fractionally. West Texas now into the closing auction, about flat or so. Tech, materials, and real estate doing the heavy lifting in the S&P 500. Speaking of heavy lifting, the team from Enhanced set to do the bell. But before we get to the closing bell, let's talk with Einstein of Wall Street, Peter Tuchman. What'd you see for the tape? Not highs across the board, but at least for the NASDAQ and S&P.
You know, just a curious tape. It was nothing, really no big imbalances to buy here at all. It just felt like the sell side walked away, right? You know what, I've been trying to analyze this whole rally, 6 weeks in a row, right after the last couple of months that we've had over the conflict in oil and all that kind of stuff. This is reminiscent of the 80s when there was a peace rally, right? Going back to when the Berlin Wall fell and Russia went sort of under as a major entity. Iran going down and the US being sort of rising to the top of this like global thing, and peace was everywhere, and the market went from Dow 3000 back then to Dow 6,500. And it's really reminiscent of that all bets are off, we're in peace mode, and the runway is clear for the next step. That's kind of where I'm going.
Amazing to think about Dow 3000 when it's above 49,000.
That was where it was.
We got to leave it there, and it's time for the closing bell. Thank you for being here. We'll see you next week. Time for the close. That's what it's all about. I'm about to run through a brick wall right now. I'm so hyped up for all-time highs, and the team from Enhanced here on the trading floor of the big board set to do the honors. The CEO will also join us here on the broadcast in just a little bit. But before we get to that, let's bring you your final tale of the tape on yet another round of all-time highs for the S&P, which will for 0.8%. The Dow up 0.02%. I love those fractional gains. The New York Stock Exchange Composite Index down 0.3, the small caps up, let's call that 0.8. Gold and silver both moving higher. The crypto majors moving higher as well. Cisco, Boeing, and Apple are your Dow leaders, your Dow 30 laggards, McDonald's, Salesforce, and JPM. Let's bring in the one and only Michael Reinking, senior market strategist here at the Stock Exchange. Fresh round of all-time highs. There's a lot of noise and things going on in the background. Yeah. Overarchingly speaking, Michael, what's driving it?
Yeah, well, I mean, the big picture, it's AI, it's earnings revisions moving higher, right? And so, you know, as you pointed out earlier, we're up for 6 consecutive weeks, right? Traders have really had to have, do some mental gymnastics over the last 6 weeks as we've rallied. You're kind of starting on March 30th and kind of now push to fresh all-time highs. The S&P 500 tagged 7,400 earlier today, right? But what, you have to deal with this cognitive dissonance, right? Where you're weighing the move higher in energy prices and the potential negative outcomes related to Iran, but that's being completely overweighed and overshadowed by the CapEx spending boom that we're seeing, and that's really driving kind of gains in technology. For this week, for the first time this year, we saw the market cap weighted S&P 500 is now outperforming the equal cap weighted S&P 500.
Oh, wow. Yeah, interesting. And we have a lot of these sessions where like equal weight tech still does very well relative to its peers. So interesting rotation. What have you seen, not just for today's tape, because we're kind of working a little bit of an inverse between semis and software. Been a really interesting last 5 days here on the street for those two sectors.
Yeah, so semiconductors, the winner of the week, the year, right, up over 10% for this week, 70% for the year for the ICE Semiconductor Index. Now, throughout the year, we've seen kind of software really underperforming, right? That's been on the back of this AI disruption, kind of vibe coding, kind of fears that have been out there. This week, we did see a couple of positive earnings reports within software, right? So we saw software stocks are up about 5% for this week. Fortinet was a particular standout, right, which really helped to drive the cybersecurity names, which have been under some significant pressure.
Let me get your take on the April jobs report. Maybe a bit of a mixed bag. Stronger on the top line, 115 for the month than had been expected. Unemployment still at 4.3, about expected. But average hourly earnings for the month and annualized, both a little bit weaker. Maybe there's something in the report for everyone. What did you see? How did investors react?
Yeah, I mean, I think there, as you pointed out, I think there was a little bit of something for everyone in there. Headline number was pretty strong. We continue to see that being driven by healthcare, which is not necessarily the most economically sensitive sectors. We did see some weakness in information technology, or in information services, financial services, right? Those tend to be your higher paying jobs. Right, so that's a little bit of kind of a little bit of a negative mix, right? And then kind of as you pointed out, right, we saw a little bit of a pullback in wages, but the average hourly work week kind of did move higher, right? So generally speaking, we've seen pretty volatile numbers over the last couple months. Right, the fact that we're seeing over 100,000 jobs kind of added, right? That's positive, right? Especially as people have suggested that the kind of break-even rate for unemployment is kind of closer to 25,000 per month, right? So that's kind of pretty positive. But quite like the Federal Reserve at this point is very much secondary, kind of in the overarching scheme of things, right? So they're going to be on hold, kind of for the foreseeable future.
I'm almost out of time. What do we make of the ceasefire? Not a ceasefire. Don't say it's not a ceasefire, but a few strikes kind of going back and forth. Mixed messaging, but still investors, for the most part, pretty positive response.
We've heard some senior officials call those love taps. So they're not, so we're not actually exchanging fire. Look, I mean, markets kind of clearly are still hoping for this diplomatic kind of resolution, and no escalation from a kinetic kind of perspective, perspective in the current conflict, and we're kind of continuing to move higher on the back of that. So.
Yeah, we definitely are. Michael Reinking, Senior Market Strategist here at the New York Stock Exchange. Have yourself a terrific weekend, my man. It's nice to see you to kick off the broadcast.
Absolutely.
Skylar, grab your mic. Jeff, I'll head this way. More than $2.5 million in total trade volume up on Polymarket to help answer the question, what will be the largest company in the world at the end of 2026? 59% odds it will be the current market cap champion. That's, of course, NVIDIA. $5.1 trillion market cap as of today. They keep getting bigger. 30% odds it'll be Alphabet, which is currently $4.7 trillion. Apple coming in at third with 6% odds to finish the year as the largest. SpaceX, not even a publicly traded company yet, has 2% chance, and at 1% on Polymarket, Saudi Aramco, Microsoft, Tesla, as well as Amazon. Jeff, let's take a look at a couple New York Stock Exchange notables, and we got to start with Dell, because Dell is in the midst of just an incredible comeback story, up 13% on the day to a new all-time high. Dell went public all the way back in 1988, but today it is a critical infrastructure partner in the AI boom. Does have some big, volatile, choppy, intraday pullbacks, but still caught in a really big uptrend, up 13% here today alone. How about Carvana? This one's kind of a mixture. This might mess with your head a bit. It's down on the day, trades at 77. Yesterday, this was almost a $400 stock. What happened? Well, really just a mechanical adjustment, a 5-for-1 stock split effective today, meaning for every one share that you had yesterday, you now have 5 shares of Carvana, but your overall value is the same. Split adjusted shares of the car giant are down about 7% from the start of 2026. This week on the J.D. Durkin Show, I had the opportunity to speak one-on-one with the truly great Kenny Polcari of Slate Stone Wealth. We talked all about big tech earnings, including NVIDIA coming up in just a few weeks' time, the strength of the so-called chip complex, and much more. Take a look. Let me get your take on NVIDIA, because NVIDIA earnings are around the corner. They will be here before we know it. What does NVIDIA actually need to say in order to keep the entire market moving higher?
Listen, NVIDIA has to come out once again and give they have the beat, like I think he's going to do, and they have to continue to talk about the demand and where they stand in it and how they stand to benefit, what the future looks like, all that same stuff, right? Now, here's the issue with things like NVIDIA, just like you saw Palantir. They could come out and give an absolutely stellar report and great guidance going forward, but you may get the trader types, and I have to watch for it as we get closer to its earnings announcement, because I want to see exactly what they do to it prior to the announcement? Do they take it up right prior to the announcement? Because then what you'll get is you'll get buy the rumor, sell the news type of a reaction. You'll get the trader types that will sell it, right? Even if it's robust and everything's great, if they run it up ahead of earnings, then the trader types will sell it and try to lock in those profits. I think and every time they do that as a long-term investor, when they sell it off, I'm right there along with a lot of other people that are like Nvidia buying it at a discount.
Kenny, I want your take on the chip complex. Man, oh man, have these stocks been hot? AMD, ARM Holdings, Marvell, they've been on fire. Is the AI trade still in the early innings, or are valuations more and more getting a little bit ahead of reality?
Listen, we're not even, we're still in the batting cages as far as I'm concerned in the AI trade, right?
We haven't even started the game.
For me, the game hasn't even begun yet, right? Because I think this whole AI trade has so much further to go. I don't think you should be worried about it. You should be cautious when it gets stretched, and there are times when it gets stretched. Look, we came into the year in January, everyone was talking about how tech and AI had gotten stretched, and we saw it doesn't mean the game is over, not by any stretch, because look, they're taking it all to brand new highs again. And so I fully suspect that we're going to see it kind of, this back and forth. It's going to draw down a little bit, and then it's going to get its legs under it and take off again. I think you have to think about AI as a long-term investment. You got to buy these names and just hold them. No, it doesn't necessarily mean you just buy everything. Be strategic about it. Do your homework. But names like AMD or Nvidia or Marvell or Palantir or CrowdStrike or about cybersecurity, by the way, we can talk about that too. That's a whole nother sector of the economy I think is going to take off again once we get quantum trading. But one way or the other, I think we're still very early in the AI trade. I think you have to have, it's going to be a piece of your portfolio, and depending on where you are in the life cycle is going to dictate, how much weighting it is in your portfolio.
So let me ask you about a few other names that have been ripping higher the last few days after earnings. Disney, Uber, we mentioned ARM, Marriott Hotels.
So,
I mean, Disney was the best performing.
Right.
I've been doing this a long time. I don't remember a day where Disney was the best performing Dow stock, but yesterday it was up 7.5%. And when you see moves like that, Kenny, does that tell you the rally is actually maybe a bit more broad than some people think?
Well, I'm not so sure. Listen, I'm not a Disney fan by any stretch. I don't own it. The firm does own it. I don't own it just because I have other places I can put my money. But one way or the other, when you see stocks like that start to react like that, and it's not just Disney. Disney to me talks about entertainment, talks about the consumer, talks about discretionary spending. And it's not inexpensive, by the way, to go to a Disney resort. Have you been to one lately? I mean, it's really expensive to go there when you think about it. And so when Disney reports like that, and they give robust guidance, that just talks to where they think the consumer is. And so, yes, I think that makes a positive comment about the economy and about the consumer. But you want to see the market broaden out. You want to see a lot of the sectors really start participating, right? And you see names like healthcare and healthcare is underperforming this year, which I think is a big mistake. I think healthcare is an underappreciated sector. And I would like to put money in there, but you want to see it broaden out for sure.
Let's rock and roll. Welcome back to the show. Our next guest, fresh off of the one and only Bell Podium, Max Martin, the co-founder and CEO of Enhance, not just here on any average day, but the day of listing. ENHA is the ticker symbol, a strong first day of listing. Welcome to the show. Nice to have you.
JD, thank you so much for having me
Dude,
on.
I've got so many wild questions for you because what you do is absolutely wild. What does Enhanced actually build? What are you guys working on foremost for anyone a bit unfamiliar?
As a company, we want to give people around the world the opportunity to live enhanced, and we have two business segments that facilitate that. The first one is a sporting business, where elite athletes have the opportunity to utilize FDA-approved substances, performance-enhancing substances, to help them recover quicker, protect themselves better from injuries, and ultimately become the best versions of themselves. We do this through the annual Enhanced Games that cover 3 sports, track, swimming, and weightlifting, and are built more like the Super Bowl than the Olympics. It's everything in one night. We have the Killers, the rock band performing, tons of ancillary events around it. Yeah, and it's happening on a yearly cadence. Throughout the rest of the year, we produce tons of more sporting content where we show that enhancements under the right clinical and medical supervision are not just safe, but have those massive performance and health benefits. With all that awareness that we create, we try to inspire people to think about what can enhancements do for yourself. And if you want to get enhanced, you have the Live Enhanced platform that gives you products to do so. One of the products that we have is in the supplement space, which is, for example, the Longer or Stronger Stack. Products, I would say, at the pinnacle of what's out there in the market in terms of supplementation, but then also we have prescription substances available to consumers in the spaces of HRT for women, TRT, certain longevity drugs, and then what we're most excited about, what we just launched a couple of weeks ago, is peptides. And both of these businesses together are actually what makes it so special, because on a standalone basis, both of them are great, but together they really thrive because all the work that we do in sports with the athletes gives us so much more knowledge. And that knowledge we make accessible to the everyday consumer in terms of personalization of protocols and helping you become the best version of yourself.
So let's get a shot. Jeff, can we get a shot of it? So walk us through exactly what did you bring us over here that we're actually looking at? Now, someone like me, I have a loose familiarity with the creatine I may take or what I take before and after I lift at the gym. Walk us through this.
Okay, so what we have here is our strength and recovery focused supplement, Stronger, and then Longer, which is all about longevity. If I just turn this around, right?
Yeah.
There's no proprietary blend, as the industry calls it a lot, where they don't tell you what's inside.
Correct.
Every ingredient is out here. We have a couple of few hero ingredients, but in the interest of time, I'll just focus on one, which is urolithin A, where we give you, it's down here, urolithin A, where we give you 1 gram per day for you to do. It's all about improving your mitochondrial function, helps you clean out your cellular system from the inside out and rejuvenate you from the inside. Keep it.
Yeah, I'll hold that here. You call them a hero supplement.
That's our hero supplement, but the difference is, when I talk to people like Brian Johnson, who is, going to be on the games as the first human enhancement expert, rather than the sports expert, he's the human enhancement expert.
Wow.
When I showed Brian for the first time this formulation, he was like, how can you offer people such a good product at this price? Because just for this hero ingredient, urolithin A, the next best supplier offers you half of the dosage at the same price that we offer you this entire pack with double the dosage plus 20 additional ingredients.
So let's go.
So it's a great product.
Yeah, let's go back to the other part of the business, the Enhanced Games. It's set to take place in Vegas, May 24th. That's Memorial Day weekend. Appropriate, you got the Killers, by the way, because that's a Vegas band.
It
Brandon
is a Vegas
Flowers,
band, yes.
UNLV through and through. $1 million prizes. What can people expect? I imagine it's going to be maybe in some ways similar to what they've seen, but in a lot of other ways unlike anything they've ever seen.
The most important for me is that they're seeing healthy, happy, well-performing athletes. And well-performing means for some athletes that they're going to break world records, that they're going to do what no one else in 8 billion people is capable of doing.
And you already know that, or that you hope for
So
that.
we've seen 2 athletes now in the training already break 2 world records. We already broke a world record last year, which is when for the first time we broke a world record with an enhanced athlete. So I expect there to be a few world records being broken. But what I'm equally as excited about is athletes that are in their 30s, that are trying to not beat a world record, but beat their personal best from when they were prime in their 20s. And that's what's just as exciting as athletes breaking world records.
Dude, but even personally, I mean, not that I'm a super athlete, but I'm here at 38 being like, man, if I could run a half marathon at the pace I did when I was 19 years old, half my life ago, I would love that opportunity. So I think there's a lot of appeal for an average consumer. How about more sports? You mentioned the 3 that you have. Are you looking to branch out beyond that?
For the games, we'll keep it at those 3 for the next few years, I think. Where we'll do other sports and other areas of also expertise is outside of the games. For sporting, I'm super excited about, for example, long-distance triathlons, marathons, cycling, and other measured events where you can showcase the efficacy of the enhancements with the athletes that do it. Beyond that, the people can be excited about more like celebrities or artists joining us as our team members for the enhanced performance team, because just think about it like this. An artist goes on tour, different time zones, tons of travel, bad sleep. Historically, people have been resorting to illicit substances use to get them through all of that. Today, the artists I'm speaking to, they are focused on their health. They want to become the best version of themselves to give their fans the best experience that they can have, which is why they're getting enhanced with us.
Dude, we will be watching very closely Memorial Day weekend in Vegas, the first ever Enhanced Games, and we didn't get to talk about the listing, but it was a great listing. I know you went public via SPAC, up 20% on your first day. Please come back and see us again, Max. It's great to see you. Congratulations.
Thank you so much for having me on the show.
These are awesome. Come back anytime, and we'll be back with more Taking Stock coming up right after this.
Welcome back to Market Movers. Well, DeFi rocked by two massive thefts totaling nearly $600 million stolen barely a month apart. $577 million was wiped out across just two major exploits, the Drift protocol on April 1st, and also the Kelpdao bridge was drained for $292 million on April 18th. Now, these two strikes alone account for about 76% of all crypto hack losses so far this year. So can the sector implement compliance rules before policymakers step in, or should compliance in DeFi be approached with varied lens? Now, to help us break all of this down here at Consensus, I am joined by Ari Redbird, who is Global Head of Policy at TRM Labs. Ari, great to have you here. Thank you so much for joining me.
Remy, I always love our conversation, so thank you so much for having me.
Well, thank you so much for joining us. It has been a busy 3 days here in Miami at Consensus, and we've been hearing from policymakers, TradFi, DeFi innovators, as well as people such as yourself. So when it comes to the hacks that we're seeing so far this year, what do you make of how North Korea has been behaving?
Yeah, it's really pretty extraordinary. And you look around this space and you realize this ecosystem is growing very, very quickly. But that's more and more incentive for bad actors like North Korea to attack it. And they really have been attacking it at scale. You mentioned that 76% number. I mean, that is really extraordinary to think of that. These aren't just hacks. These are stolen funds, around 600 million that's going to weapons proliferation and destabilizing activity. So look, I think North Korea is getting much better at this. If you looked at the playbook for the Drift protocol hack in particular, I mean, you come to a conference like this and it's chilling. They sent they sent people to conferences to meet with the Drift team, to invest in the business. This wasn't just sort of a tech hack. This was a social engineered hack at scale. And what concerns me most of all is that Drift is one of probably many targets that we may see play out over the next, weeks and months. And North Korea is really playing the long game, and we need to fight back.
And Ari, I want you to break this down because we talk about technology, whether we're talking about this intersection of DeFi and TradFi, but at the end of the day, it's actually about human beings, isn't it, when we talk about social engineering? So tell us about some of the tactics here.
It absolutely is. And I think it's just being extremely vigilant because at the end of the day, it is, they're phishing attacks. They're reaching out to individual people to get access to the private keys, to these validators, to be able to attack this ecosystem. So I think it's being incredibly careful. Cybersecurity is critical. By the time we get involved and we're tracking and tracing funds, that's a race against time. And what we really have to do is stop these attacks from happening in the first place. I think a lot of the conversation has been, what can DeFi protocols do, or why are DeFi protocols so vulnerable? And I think that's a part of this. And I think that's why we need real robust cybersecurity standards and beyond. But I actually take a little bit of a different tact, and that is we need to go after the bad guys, right? This is not about sort of blaming victims because North Korea is attacking them. It's how do we go after North Korea? If North Korea steals 600 million from the DeFi ecosystem, we should be taking that back. And that means national security. That means offensive cyber. That means empowering the private sector to potentially go after these guys. So I think there's a lot we can do way beyond sort of crypto or crypto compliance when it comes to this threat.
Well, Ari, always great talking to you. I know you have to head to the stage for your panel, so thank you so much for joining us this morning. We appreciate all of your
Such
insights.
a pleasure. Love
Thank you
joining
so
you.
much.
Thanks, Remy.
Thank you.
Welcome back. I'm Scarlett Sieber with Money 2020, and this is how fintech companies actually make that money, where we stop treating complexity like innovation and actually look at where the real revenue comes from. Today we're going to be talking about Arch, because private markets might be one of the most opaque parts of finance, and quietly one of the most profitable. Private investing has exploded, trillions of dollars, more allocations than ever, but products and more products than ever as well. Yet operationally, much of the industry is still powered by email threads, PDFs, spreadsheets, and guesswork. That's the gap Arch goes after. Arch builds operating infrastructure for allocators, family offices, private banks, and institutional investors managing private assets, capital calls, documents, reporting, you name it. All the things that make private markets painful to run at scale. So let's talk about how Arch actually makes that money. First, this is enterprise SaaS as well. Arch sells annual subscriptions to institutions that need a system of record for private markets. These are not lightweight tools, people. Once Arch is implemented, it becomes central to your reporting, compliance, and your portfolio oversight. Second, tiered pricing based on scale and complexity. As assets under administration grow, as more funds and vehicles are added, and as more teams rely on the platform, revenue scales alongside that right next to it, not just headcount. Third, deep workflow lock-in. Arch doesn't just store documents, it becomes where capital calls are managed, where LP reporting lives, and where institutional memory accumulates. Switching away isn't just inconvenient, it's risky. That's the pattern you want in infrastructure. So why does that really matter? Private markets move slowly, but they punish mistakes brutally. Reporting errors, missed documents, or delayed disclosures can damage real investor relationships. So firms will pay, reliably and repeatedly, for software that reduces operational risk. That's why Arch has been in the spotlight recently. Straight off of a hot $52 million Series B, investors weren't betting on hype, they were betting on the slow, inevitable modernization of private market infrastructure. Why now? Because private assets have outgrown their tools. Regulators want transparency, LPs want timely data, institutions can't scale back office headcount forever, it's just not going to work. And throwing more people at the problem doesn't fix structural inefficiency. Arch isn't trying to make private markets exciting, it's trying to make them operationally sane. And that's how Arch actually makes money, by turning private market chaos into enterprise infrastructure that institutions can't afford to live without. It's not flashy, but in finance, boring infrastructure is often exactly where the money is. Is there a fintech or company that you want us to feature? Drop it in the comments and it just might make the cut. In the meantime, back over to you.
Next week here on Wall Street, we will get the latest quarterly results from names like Rigetti Computing, Alibaba, Cisco, Klarna, Figma, and much more, plus the latest inflation prints for CPI and PPI as well. That'll do it for today's and this week's editions of Taking Stock live from the trading floor of the New York Stock Exchange. Thanks for watching. We'll see you on Monday.